Okay, let's unpack this. We are diving into what looks like a sudden, pretty massive acceleration of global trade friction.
Yeah, it's moving fast.
Our focus today is the immediate fallout, really, from the announced Sino-American tariff escalation. This is, as of today, October 2025. And this isn't just background noise. This feels like a systemic shock.
Absolutely.
So our mission here, for you listening, is to try and move past the immediate market panic, maybe some of the political hot air. We really need to distill the foundational, the verified facts. What are the specific dates, the exact measures announced?
And why this is happening now.
Exactly. And crucially, understand why this particular escalation seems to target, well, the future of global technology, not just, say, traditional consumer goods.
Right. It feels different this time.
And when you look at the source material, I mean, the singular, just overwhelming fact that seems to have kicked this whole thing off is the announced plan by President Trump to impose a colossal 100% tariff on Chinese imports.
Yeah, 100%.
That figure, 100%, it feels like a strategic statement, doesn't it? It's not a tweak.
No, it's definitely not a tweak. It's, a complete reset of the trade conversation, potentially. That's really the starting gun here.
Right.
That 100% announcement, it's been confirmed through official statements, verified across, multiple major news agencies. It didn't just shock the markets.
Which it certainly did.
Oh, yeah. It also created this immediate kind of diplomatic vacuum. And Beijing felt they had to fill that instantly. What's fascinating here is we're not waiting days or weeks for a reaction. We've got a public, official counter-response hitting the wires, well, today.
Okay, let's just dwell on that 100% number for a second. I mean, historically, trade escalations, they happen in increments, right? 5%, 10, maybe 25% sometimes.
Yeah, usually.
This feels like turning the dial straight to 11, diplomatically speaking.
Yeah.
Is the general feeling out there that this figure is, like, purely a negotiating hammer? Or is this being taken seriously as actual economic policy?
Well, analysts seem deeply divided on the intent.
Okay.
But they agree on one thing. You have to react to the threat as if it's real.
Okay.
I mean, if implemented a 100% tariff, it just wipes out profitability for almost any goods needing transit. It's that simple.
Right.
But many trade experts do suggest the primary function of such an extreme number is probably political. It immediately grabs global attention, establishes maximum leverage for any future negotiations, if they happen.
But that leverage comes at a cost. Stability, presumably.
Exactly. The cost is stability, which we saw break down immediately with these counter moves from China.
So let's get into those. What did the Chinese government officially, publicly announce today, right after this 100% tariff threat landed?
Okay, so we have two verifiable, pretty specific actions that define China's stance right now. First, they moved very quickly to publicly defend their existing rare earth export controls.
Oh, okay. Existing ones.
Existing ones. And that's a critical strategic move. They're signaling, basically, if the U.S. is going to escalate using tariffs, China will respond using its control over critical materials.
Which they have significant control over.
They do. And it's important to understand why they emphasized an existing control. They're confirming they have this major pressure point. Rare earths, as you know, are essential inputs for everything from your phone to advanced defense systems.
Right. EVs, everything.
Exactly. So by defending those controls publicly now, right after the tariff news, they're reminding the global market, and maybe specifically U.S. manufacturers, that they hold some important keys to those foundational components.
That immediately frames this whole conflict around technology, doesn't it? Not just, socks and TVs.
Precisely.
Okay, so what was the second part of their official response? You said there were two things. Something more tangible maybe in the immediate shipping lanes.
Correct. The second announced action was the imposition of new port fees on U.S. ships.
New fees. Okay.
Yeah, this is extremely visible, immediate, and potentially high impact in the logistics world. The moment these fees take effect, the cost of moving U.S. goods into Chinese ports jumps instantly.
So that hits shipping companies, logistics providers.
U.S. agricultural exporters may be relying on bulk shipping.
Right, immediately. It sort of bypasses the whole slow process of setting new tariffs through legislation.
Exactly. It's a direct, quick hit.
So, okay, we have a U.S. threat against imports coming in, and a Chinese counter-threat against U.S. exports and shipping going out, and their public warning, the sources say, was pretty clear. they would stand firm.
Stand firm.
That suggests this isn't just, a first offer in a negotiation. It sounds more like a commitment to an escalated fight.
It does have that feel, yes. It suggests a hardening of positions.
Okay, so here's where, for me, it gets really interesting. Because to really get the significance of this 100% plan, you have to realize it threatens to blow up a very delicate sort of peace that was already in place.
Right. This isn't happening in a vacuum.
No, this escalation isn't starting from zero. It risks collapsing a prior, maybe fragile diplomatic framework.
Absolutely. This new 100% threat, it lands directly on top of the ashes of what was known as the May 12 framework.
Okay, May 12th? That was just this past May 2025.
That's right. And that framework, it provided a specific, though temporary, reprieve.
Can you just walk us through the specifics of that May 12th agreement? What exactly was keeping the peace such as it was?
Well, the agreement essentially maintained a kind of lower-level conflict framework.
Yeah.
There was a reciprocal 10% tariff between the two nations, technically still on the books.
Okay, 10% each way.
Right. But the diplomatic achievement, the key part, was the suspension of those tariffs.
Ah, so they were paused.
They were paused. And crucially, that suspension had been formally extended until a specific date, November 10th, 2025.
November 10th. Just a few weeks away then.
Exactly. Think of it like this. The two sides had agreed to kind of put their 10% guns down until November 10th.
Right.
This new 100% tariffs plan, announced now in October, it just completely preempts and, frankly, invalidates that November deadline.
Because the scale is just so different.
Totally. The new scale is so massive that the whole 10% suspension becomes functionally irrelevant. This new announcement basically signals that the U.S. is abandoning that negotiated truce well before the agreed-upon expiration date.
So the political implication is pretty profound then. That temporary peace deal, it's essentially kaput.
Pretty much.
It transforms what was supposed to be a few more weeks of a holding pattern into an immediate trade war scenario where maybe the old diplomatic norms are just tossed aside.
That's precisely the interpretation many are making. And this, premature end to the truce, it signals a significant breakdown in trust, or at least in the process.
Yeah.
The fragility of these kinds of frameworks is always how quickly one side can just move to invalidate it. And the 100% announcement did that instantly.
Wow. Okay. Now let's get to what might be the real structural challenge facing global industry here. This cumulative effect.
The layering.
Exactly. This 100% announcement isn't just a singular new cost hitting companies. It's layering onto existing significant tariffs and export controls that have been building up for, well over a year now?
Yes, easily.
It feels like a weight pressing down on industries that were already kind of struggling to adapt.
This layering problem, as you put it, that's the key driver of the market concern we're seeing. The current actions are piled high on top of a whole series of targeted U.S. duties and export restrictions.
Right.
Things that were rolled out incrementally throughout 2024 and into 2025. And this shows a kind of strategic intent that actually precedes the current administration change.
Okay, so which sectors specifically have been the targets of those pre-existing duties? The ones from 2024, 2025? Because that tells us who's going to feel the pain most acutely from this new higher layer of conflict.
Well, the focus of those prior duties has been almost entirely strategic. It seems aimed at creating independence, or at least alternative supply chains, in key future technologies.
Okay, like what?
We're specifically talking about electric vehicles, EVs.
Right.
The advanced batteries that power them, semiconductors, obviously.
Big one.
Huge. And certain related high-tech components as well.
So these industries were already adjusting.
They were. For instance, you had many companies already working hard to rework their supply chains to cope with, say, significant duties imposed on specific EV battery components back in early 2024.
Right.
These companies now face a kind of double whammy. They were already struggling with those high 2024 duties, only to now potentially face a 100% tariff on maybe the Chinese inputs they couldn't quickly replace.
It really sounds like this isn't about, protecting the textile industry anymore. This feels more like strategic economic warfare,
right,
focused on who controls the technologies of tomorrow.
That seems to be the consensus reading, yes.
And that brings us back neatly to China's response, that official defense of their rare earth controls. How does that specifically intensify the pressure on, say, an EV manufacturer caught in the middle?
Well, it creates a critical vulnerability, doesn't it? Rare earths and certain refined materials from them, they're just indispensable for things like the high-performance magnets used in EV motors.
Right. Can't make them without them, really.
Pretty much.
Yeah.
So if the U.S. imposes a 100% tariff, okay, that potentially prices Chinese finished goods out of the U.S. market. But
Mm.
If China simultaneously restricts or even just slows the export of the raw rare earth materials,
Ah,
they
okay.
hit the supply chain of every global manufacturer, doesn't matter where they assemble their final product.
Wow. So it's a pincer movement almost.
You could see it that way.
Mm.
And analysts are specifically warning that this combination, the tariff threat plus the rare earth defense, it pretty much guarantees near-term supply chain disruption.
Okay.
Companies relying on those complex inputs, semiconductors, EV-related components, they must now be scrambling to find non-Chinese sourcing, which is either scarce, significantly more expensive, or maybe just non-existent at the scale they need right now.
We mentioned the immediate market reaction earlier. Beyond just the headline stock movements, were there specific indicators that confirmed businesses and investors really understood the gravity of this shift towards strategic materials?
Yeah. Beyond the obvious volatility in tech stocks and the major indices, we saw confirmed spikes in commodity prices tied to some of these key materials.
Okay.
And also, companies involved in specialized shipping and logistics, they saw immediate dips in their stock prices.
Because of the port fees and the general uncertainty?
Exactly. The viability of those cross-Pacific trade routes just became highly questionable under the new port fees and that looming 100% tariff threat. This immediate movement, it confirmed that traders were pricing in potentially extreme disruption, not just, temporary noise.
Right. Okay, let's try and synthesize these layered actions for you, the listener, just focusing on the core implications. We've got an announced 100% tariff plan on imports from the U.S. side. China has immediately responded, first by defending its leverage over critical inputs, those rare earth export controls, and second, by imposing new port fees on U.S. ships.
Right. Direct and indirect pressure.
Furthermore, this entire sequence of events seems to have definitively ended that diplomatic truce, the one that suspended the reciprocal 10% tariffs, making that November 10th deadline basically meaningless now.
Yeah, that seems gone.
And critically, all this pressure is being concentrated on industries like electric vehicles, batteries, and semiconductor sectors, already struggling under targeted duties imposed over the last, year or two.
That's the cumulative impact, yes.
Wow.
When we connect all this to the bigger picture, I think the key takeaway is that the fundamental nature of this economic conflict, it feels like it's shifted.
How so?
It seems it's no longer primarily about balancing trade deficits in, general consumer goods. It feels squarely focused now on who controls the supply chains for the most advanced technologies of the 21st century.
Rare earths, semiconductors, EV components.
Exactly. These are the strategic battlegrounds now being, well, weaponized, frankly. And this raises, I think, an important final question for anyone tracking the future global economy.
Yeah.
You have to ask,
Yeah.
if the two largest global economies are now using foundational clean energy components like rare earths and semiconductors as immediate weapons in a trade dispute,
Right.
what just happened to the global timeline for EV adoption? And what about the goal of establishing semiconductor independence in various regions?
That's a huge question.
It is. This is the strategic consequence, perhaps, of this current escalation that, well, you, the listener, will really need to track closely in the coming weeks.